Fabulous. I'll have something to send my mom. I can guarantee one viewer for sure. Yes.
Before we jump into questions, we're at a big moment for you. You just celebrated your 40th anniversary, and you were down at the exchange ringing the bell.
Yes.
What was that like?
That was great. You know, you're ringing that bell. It's historic. You feel this sense of progress the firm has made over time. We've been public now since 2007, but it was founded by Pete Peterson and Steve Schwarzman in 1985. And it's been an incredible journey. But it was nice for this day to just reflect on what's been achieved from Pete and Steve, $400,000 in a dream into what has become a very large, successful business.
Well, congratulations. So let's go back, your early years growing up in Highland Park. And I'm wondering, were there any sort of signs of a career in investing or finance?
When I went to college, I don't think I had a real inclination towards finance. Maybe bought a few stocks with bar mitzvah money, that sort of thing, but very little. And then what happened was I went to the University of Pennsylvania, and I was going to be an English major, and I thought I'd want to write for the New York Times. And my friends there, many of them were in Wharton, and they were very business and markets oriented. And I said, oh, I like that stuff too. So I decided to get a dual degree. And that was probably the most important decision of my life, because I stuck being an English major. And my senior year, I met a woman in romantic poetry class, a true story, who became my wife. And I don't know, a month later, I got a job working for a very small investment and advisory firm called Blackstone. And that was now almost 34 years ago.
So working at Blackstone, though, wasn't there a little clue when you were younger?
My grandfather's business, he had an automotive parts business which manufactured on the west side of Chicago called Blackstone Manufacturing Corporation, BMC. And unfortunately, because of the cost of manufacturing in the 70s, there were Japanese, Korean manufacturers who did it much more cheaply. They basically went out of business. But my grandfather passed in the fall of '92, and it was, 6 months or whenever after I got the job. And I remember telling him, Grandpa, guess what? I'm going to work at Blackstone. So it felt like it was probably meant to be. It's a very odd coincidence, but I often think about it.
Yeah, that's funny. Very funny. So you started Blackstone. I think you were the first analyst in the real estate department in 92, 93?
Well, interestingly, when I started Blackstone, there is no real estate business. So what I started in is the M&A and private equity area. And what was great for me is I got unbelievable training in M&A and private equity, which would prove invaluable as we ultimately expanded our real estate business to be much more than property investing. And so about a year into things, the real estate world had collapsed, and Pete and Steve had this idea we should go into real estate. And this was, I think, part of Steve's genius, this idea that we can be more than one thing. If we can build an investment business serving clients, we can do multiple things. And one of the partners at the time tapped me on the shoulder and said, hey, do you want to go help out on this for a couple of years? We're going to go do a little real estate. And I was like, sure. So I often describe luck as a core competency for me. And so that's how I ended up stumbling into the real estate business. I didn't have any background at all.
You went on and made some of the biggest bets in the industry, in particular, the investment in Hilton you made, which was right before the GFC.
Beautiful timing.
I can't imagine a worse time to make a real estate investment, but notwithstanding that went on to be one of the best investments ever. How did you navigate through such a tough start?
So we started as, doing a few larger portfolios and so forth. And then the dot-com bubble came along. And Alan Greenspan, as you recall, cut rates. The commercial mortgage-backed securities market sort of emerged, where you could go to banks for financing at scale in real estate, and put a bunch of properties together and access lower cost debt as opposed to using leveraged loans and high yield from the corporate world. And what we started doing was buying real estate companies, because at that point, as rates came down in the early mid 2000s, prices started going up. And we said, it's cheaper to buy the whole company on the screen than it is to buy the individual properties. And that was the insight. It crescendoed in 2007 when we bought Equity Office Properties, the biggest office company, for $39 billion in a bidding war. And we fortunately sold a lot of the properties quickly. Otherwise, we would not be sitting here together. And then 6 months later, to your point, Lawrence, we bought Hilton Hotels in June of 2007 because we saw the company had amazing brands, Hilton Garden, Hampton Inns, Waldorf, all that. And it also owned some amazing real estate, including the Waldorf and the Hilton Hawaiian Village and the Park Lane Hilton in London. And we thought there was a lot of embedded value in the company and there was more to do. But our timing was awful. We bought the business for $26 billion. We leveraged it with $20 billion of debt. I was much braver when I was younger. And within, by September of 2008, obviously, the financial crisis had started, and we marked the investment down 71%. That was really painful. But I had this fundamental belief that this was a great business, and we just said, we're going to get through it. We're going to put our heads down. The business will continue to expand globally. Ultimately, revenue started recovering. We broke it into 3 public companies over time, sold some assets off, and ended up making $14 billion for our investors, which was more than a tripling of the capital we put in, which is pretty amazing given where we started.
I think that also probably speaks to the importance of having scale, because to be able to stay through it, you've got to be a scaled player.
I think there's no question that it was a scale, high quality business, and the fact that we had resources to back the business made a huge difference. But it would end up having a really formative impact on me as an investor. It's about the quality of the business we buy, the quality of the management team, and the neighborhood the business sits in. And even if you bought it at the wrong time at a high price, if you've got the staying power to get to the other side, you can do really well. And by the way, our biggest mistake on Hilton, if we had just held it, we could have done another tripling of our capital. But that was really powerful. And the lesson of having some equanimity, getting through this. I say to my kids, I now say every week to the folks at the firm, stay calm, stay positive, never give up.
So let's spend a couple of minutes on the leadership transition here at Blackstone, which I think was not only important at Blackstone, frankly, it was important in the industry. What was it like from your perspective to go through that? And importantly, how do you fill some of the biggest shoes in the history of the industry?
We've always thought about the firm as a long-term, enduring enterprise. Nothing transactional. It's the way we think about our clients as well, that, yeah, you can make a little more money here, but ultimately we'll do the best if they do the best. It's the same sort of approach. And real credit to Steve Schwarzman, who is a visionary founder, to my predecessor, Tony James, the former president, COO. They had a clear path. They recognized me fairly early on that they were going to give me more responsibility. So I went on the management committee of the firm, I would say back in 2007. I went on the board 2011 or 12. And then we announced this in 2018. But they began signaling to the outside world this was the path of travel. They started bringing me in the last couple of years to get involved in sensitive things like compensation and conflicts, because they wanted to have me fully sort of as trained as I could be for the moment. Obviously, I still had to learn a ton. Yep. There were a lot of things about hedge funds and credit markets and all different industries, pharmaceutical, energy, so forth, technology. But in terms of creating a bridge and the easiest path possible to what is a very challenging job, it was amazing. And as I said, credit to Steve and Tony.
That's great. That's great. So one of the things we spend a lot of time on is the high net worth channel. And you guys were very early, arguably the earliest in understanding the importance of it. And like your large real estate bets, you made a big bet with the firm's operating budget to put a lot of people in the field. There are hundreds, I think, of Blackstone people all over the world. Where do you think we go from here? And what does the LP base of Blackstone look like in the next 5 years?
People talk about wealth as a new phenomenon. We raised our first drawdown capital in wealth 23 years ago. And so this has been a long path, and it's based on a simple premise, which is institutional customers with a long-term perspective allocate a third or more of their investment assets to alternatives because of the return benefits and the diversification benefits. Why, when I look at individuals, particularly affluent individuals, why do they have 1% or less allocated in this area? So why don't we dedicate the resources and ultimately design products, either yield, tax efficiency, ease of access as opposed to drawdowns. And when we go into the market, why don't we change some of the practices? Because as you know, the historic practices were basically give a bad experience to the customer. That's a nice way of saying it. Charge 12 points up front, acquisition, disposition, financing fees, and have people who have no experience investing doing it. So why don't we instead give individual investors an institutional quality experience, both from a cost standpoint, but also from a performance standpoint? And won't they then just react the same way as institutional investors who say, hey, that was a good experience. I want more of that, and I'll try other things on the menu. But it is all built on performance and operating at the highest standards, valuations, conflicts, all that stuff that we do so well for the institutional investor has to be ported over exactly the same standards to the individual investor. And that has made a huge difference. So when I look out over time, we're at 290 billion, more than a quarter of our assets. I would suspect that will grow. I still think the institutional business will grow. The insurance business, which is about a quarter, is also growing very quickly. But this is an area, yes, where there's particularly high rate of growth because the underlying market's so underpenetrated.
So how do your institutional investors feel about this trend, and how do you manage any concerns they might have?
Well, look, one of the good things is we've been at it a long time. So we can point to that for our institutional investors. I think also the keys for them are, do we continue to perform? For the larger investors who are seeking co-investment, are we continuing to deliver for them? And the good news is we're checking both of those boxes. This is a new addition, but it's a very large universe of alternatives, very large. If you look at public equities, if you look at corporate bonds, if you look at real estate and infrastructure, there's 300 trillion of assets. There's just 13 trillion in the private space. 90+% of the companies in the US who have more than 100 million of revenues are private. It's a big investable universe. So at the end of the day, the key for our institutions is, does Blackstone still care and deliver for us? You cannot forget that. This is a client-driven business, and so we've got to deliver for all these groups. As long as we maintain that high standard, I think it's going to work really well. And there are real benefits at scale. There's also lots of insights we get from our portfolio as it expands. It's one of the reasons I think we've been such good thematic investors, because we have more data points. So I don't view this as a zero-sum game. I view what's happening as actually quite additive to the institutional investor experience.
Yeah, well, I think you hit it on the head. The returns at the end of the day, if you're delivering returns, then people will be happy. Whether they're institutions or individuals, it doesn't matter.
Doesn't matter.
Let's change and talk a little about leadership. So there are lots of different leadership, skills and strengths that are important. We all have our own styles. What is your leadership style, and what are your most natural leadership strengths, do you think?
I don't know about you. It's not like you're born into leadership. It's sort of something you learn over time as you make mistakes. I've come to realize that people key off what you do when you're a leader. And so for me, I guess my number one thing in leadership is I'm trying to embody what I want the organization to be. Totally committed, wanting to win, wanting to be successful, trying to do it in a nice way, team play, operating with integrity, and being able to show who you are what matters to you. Being able to communicate at scale is also very important as part of this.
I agree 100% with all that. What you do when they're not looking, it all sends the same message. So leadership challenge in one context, probably more profoundly this summer. Tragic shooting here in the building. Several people lost their lives, including someone with whom you were very close, one of your colleagues. How do you lead this large global organization through that, particularly when you're in a grieving mode yourself?
Well, there's definitely no playbook. What happened for us on July 28th was horrible. Wesley, who we lost, was an amazing individual. She was a senior executive in our real estate area, the CEO of BREIT. Just a great human being. She also had this gift to give back to other people, particularly young working women. Tell them you can do this. You can achieve at a high level. If you want to have a family, you can do that as well. And it was just a terrible random act of violence from a deeply disturbed person. I was on the 44th floor that day when I started getting calls from my colleagues who had either seen or heard the shooting. And obviously the immediate reaction was, let's try to get people as safe as possible. Some of the people were stuck in the building hiding for quite some time, which was very traumatic. And then you got the news later that night. I had heard earlier, but that Wesley had been killed, which was horrible. And then you have to try to find your way. Like, what's the right balance? Because you've got a lot of human beings who've been traumatized, who are facing loss. You're also trying to run a business. And, what's the right way? And there's, as I said, a playbook for this. So we closed the office for the week. And then when we reopened, Steve and I met everybody as they were coming into the building. We ended up walking all the floors over a couple days between here and our building on Lexington. And people found being together was very helpful. And I think the only positive that comes out of this is it showed a resiliency and a level of care that made me very proud at the firm. And one of my colleagues wrote me that it was the worst of times, but the best of Blackstone. And I think that was a really fair description.
Thank you for answering that question. I know that was not easy.
Yeah.
Changing topics. Yes. So you and Mindy have been incredibly generous over the years. I think you've given well in excess of hundreds of millions of dollars to different charities. And I'm wondering if as you juxtapose your investments on the philanthropic side with the investments you make as a businessman, how do you think about the strategy around your investing, the measurement of success, on your philanthropic investing? Because you do a very good job of that on the business side. How do you do it on the personal side?
So it's interesting. When we started doing philanthropy, we hadn't come from money, so we didn't know what you do. And you start meeting people, that's interesting, and you spread it around and so forth. And I don't know, maybe 12 years ago, we started saying, this is not a good model. We got to think about it more like a portfolio company or high conviction investing. We sat down and said, what are our priorities going to be? Where are we going to really focus? And I think for me, the idea was, what do we have a passion connection to? And this was Mindy's thought. So we lost Mindy's sister to a BRCA-related gene mutation, BRCA, which leads to high incidence of cancer, particularly amongst women in breast and ovarian cancer. And then we also decided we were going to focus on low-income kids in New York City because our kids had all the opportunity in the world. And why shouldn't we help kids here around education and healthcare and job opportunities? And that focus has made us much more effective. High conviction investing, backing great talent, and then lean in and focus.
Jon, it has been so much fun getting glimpses of you as a person with things like your holiday video, which, by the way, is absolutely hysterical. It is so funny. But in addition to that, the running video. So I have a question for you. As you're running, do you have a crew running with you, or are you holding the camera?
And is it like this?
Yeah.
No. It is very high tech. I run like this. I sometimes do 2 takes, whatever. And I just try to think about what's interesting, what I'm excited about, give people a sense of place in an interesting background, running in the Opera House in Sydney or the Imperial Gardens in Japan or along the wharf in San Francisco, whatever it is. And then talk a little bit about what I see in business, the environment, maybe some insight, and then hopefully something a little funny. It's been an incredible way to communicate with people that's disintermediated. It's one, social media has a lot of ills, but I think this has been really helpful.
How do you keep yourself grounded in spite of all the success, or in the context?
I think for me, it's a couple things. One is I never forget, I'm a kid from suburban Chicago who never grew up with anything like this. And so I can't picture myself as something different than that sort of striving, insecure kid. So that's sort of still in my core DNA. I do think that sort of created who I am and created this drive later in life. And when you go through crises and problems, just sort of maintaining a level of equanimity, not doing anything dramatic, trying to have perspective, taking a long-term view. And then I give my wife and daughters a lot of credit for reminding me every day exactly who I am and, of course, what's important. So I just feel incredibly lucky at the core.
Okay, it's Tuesday morning. I'm in Hong Kong. It is Wednesday morning. Tokyo, Japan.
You've been in Asia 10 times since 24, Europe, all over the world, Middle East, certainly. Yeah. It's an unbelievable amount of travel, and I know you're very competitive, and you've got to be out there on the field.
Yes.
But how do you find time for your family? How do you make that time?
Well, I'd say a couple of things. One is I probably have to be more forced and intentional in prioritization. So for me, it's my job, it's my family. It probably means I can't spend as much time with friends or as much personal time as other people do. I've made a conscious choice about that. With my family, I stay connected, obviously in the family group chats, talking to my kids when I can, even when I'm traveling. I've adult children now. You're trying to find a way to connect with them on a regular basis, often on their terms.
Yep. Always on their terms.
Always on their terms. And I guess the other thing is I love to travel, ironically. So taking great family trips to exotic places, taking them where they're forced to eat meals with you, that to me is a really special thing. This is what really matters.
All right. Thanks, Jon.
Thank you, Lawrence. Great.
Appreciate it.
Thank you.